Hi traders, Jason G here with Responsible Day Trading. Today is Monday the 12th of September and this is your market weekly rundown. So we're going to be taking a look at the market environment on the S&P 500, take a look at some of the price action that we've had today and look at some of the higher time frames to get an idea of what we can expect to see, hopefully identify some opportunities in the market environment. So let's start as we always do. We're going to take a look at the news, see what we can expect. Quite a busy week for news. Tuesday, Wednesday, Thursday, these are high volatility news events. So if you're not someone that is used to trading news events, then you definitely want to be sitting on the sidelines 10-15 minutes before any of these events and wait until things sort of calm down, settle down after that news event, because these type of news events tend to make the price action quite choppy. Can get a little bit erratic. If you're on low risk, you can easily get chopped out of the market or chopped out your position. So keep an eye on these news events. The ones that really stand out for me as probably going to be the highest volatility will be on Wednesday with the PPIs and especially the crude oil inventories, and also on Thursdays with the jobless claims and the Philly Fed Manufacturing Index. They're all coming out around the same time anyway, so it will be one big sort of choppy, volatile market environment there for a good 15 minutes to 30 minutes, usually something like that. Okay, so let's start by looking at the daily chart, higher time frame analysis. I'm just going to scale it in a bit closer for you. So each one of these bars represents one day in the market. So if we're looking at these last few bars here, this would be last week. But generally what's happened here is, since the beginning of the year we had the big sell-off, big moves to the downside, big pullback, continuation, pullback, and a continuation, and then we had this extended, you could call that a sort of deeper retracement, quite similar to this one here actually. We pulled back quite far after putting in a bit of a bottom here at a previous support area that was quite significant. So we broke through the EMAs, we really extended way past those EMAs and then made the snapback to the downside here, pushing back through them again. And now we're at a situation where we have found some more support at a previous resistance and support area. So if we look at this price against the MACDs, you can see we had a big strong move to the downside. The MACDs were really strong here. And you can see that pullback here, we showed no signs of a significant pullback on the MACDs. This is what we call a skid off the outside of the Bollinger Band. And that's because there was so much momentum to the downside, it didn't even register on that pullback, didn't even register on the MACDs, and they just kept gunning it to the downside. We broke straight through the zero line with no hesitation at all, no reaction even to that zero line or respect of it. As you see, we often do. There's previous respect here, here and here. There's a lot of strength here, and when you get a lot of strength in a move to the downside, we'll often just pass straight through it, as we did on the move to the upside. Now what we're seeing is this pullback here, which is not really equal to the pullback we're seeing on the MACDs, indicating the potential for retracement divergence, right? So it's still early days yet, but we could see this turn into a divergence play and a short opportunity to the downside. So if we look where we are in terms of price action now, we pulled in between the EMAs. Price often likes to chop around in between here, and we're in this zone where we've had a lot of price action. If I look back here actually, you see very choppy price action on the hard left of the screen there, and you can see we've also had a lot of previous support and resistance, over here resistance. So I expect to see Now we've pulled back into this area again. I expect to see potentially some sideways price action for a little while until a decision is made as to whether we're going to continue down, which, you know, maybe the MACDs are going to give us a really nice retracement divergence signal. Maybe they're going to move up to the 0 line and roll over, something along those lines. Might find some resistance up here, or alternative scenario, we could just keep going straight through. Maybe these MACDs are going to roll over, break straight through the 0 line and find some support there, and then we move up to the next level just above here in this zone here marked out, where again, you know, there is a lot of price action here as well. So it all depends how things go over the next few days and coming weeks. A lot of big news coming up, so yeah, I don't expect we're going to stay in here too long, probably a few days to a week or so. As you can see previously, that's what we've done. We've just hanged around here for around a week or so, except for this occasion where we were stuck here for quite some time, a couple of months. But hopefully, you know, that's what's going to happen. We're just going to consolidate in this zone before, you know, the market chooses a direction to go. Are we going to move to the upside or continue on down? These bars that we've seen to the upside over the last week are really strong. You can see those closes all the way to the top end of the bar there, indicating a lot of strength and momentum. Okay, so let's take a look at our next chart, a bit more of a zoomed in perspective of what's been going on over the last few days. You can see we've had a, you know, this is maybe going back 4 or 5 days here, or almost a week. Big strong push to the upside. EMA's crossed over, strong and wide apart, price pulling away from the EMAs consistently, barely pulling back and getting close to them to find a little bit of support. And now over the last day or so, end of last week and today, we're kind of running out of steam to the upside here. We've sort of slowed down and we're starting to consolidate and move sideways. And if you look at how price action compares to the MACDs, we do have pretty significant divergence. If I mark out the equivalent price action there, you can see we're going in opposite directions. The MACDs are making lower pivots. And there's even a lower one there. So over this period of time, you know, we've just been making major lower pivots here, but pushing on up, continuing to go up. Eventually getting a bit of a slightly stronger pullback. You know, we slightly overrun the EMA, and now as of today, we've just been pushing sideways. MACDs are starting to tighten up and flatten out. Incidentally, we look like we're putting in a really nice, potentially a nice reversal pivot there. We'll see how that plays out, but I can see the potential for a deeper pullback here in the coming hours. We're going to move down to here, maybe a bit lower, find some support on the slower EMA, and if we see continued divergence, maybe some retracement divergence on the MACDs, and we start to see, you know, things going in sort of this direction on the MACDs. You know, we might just break through the 0 line, and then there is the potential for this to push somewhat further down. So if you look at the 1597 tick chart here, this is the price action for today. Market open here on this yellow line. Big strong move to the upside. Equal and opposite reaction practically as we retest this area over here, and then we put in a lower high, forming a wedge pattern here, something along those lines here. We can mark it out like that. But basically we're compressing into a tighter and tighter space, and then as we move along, you can see that we broke out that wedge to the upside, and with some quite significant strength. You know, we're putting in a lot of resistance of this dynamic, it's a dynamic resistance line, the outer boundary of a wedge or a support line on the underside here. But yeah, we've been putting in a lot of dynamic resistance, bouncing off this, continually bouncing, and then finally failed to hold, broke straight through, pullback, and now we've had this pretty strong, significant move to the upside with a massive reversal pivot here. So what I expect is in the coming hours, and this is not a prediction, it's just what I'm seeing in terms of the price action and the MACDs together. I would expect to see at some point a sort of retest of the outside of that wedge, which was really significant dynamic resistance line, given it had so many hits and so much respect. It was clearly being observed and identified by many traders in the market, right? That's why we kept getting these really clean reactions off of this line, because everybody's identifying that wedge and making their buys and sells at that area. So you can see that we've really overextended from it, and it's quite common to see price pull back and maybe retest this on the outside, bounce around with the potential to continue to the upside if that's the general direction we're going, and if not, failure and moving to the downside, maybe putting in some more resistance, retesting the underside of it. If that holds, then I would expect to move and continue to the downside and maybe test the lower extremity of this wedge as we move down here, potentially breaking through. Yeah, that's quite a bit of price action there to be really analyzing, but these are the sort of common scenarios I expect to see with this type of pattern in the market. So that's it for the market weekly rundown. I'm Jason G with Responsible Day Trading. Looks like there's going to be lots of opportunities in the market this week, lots of news, so lots of volatility. Pay attention to those news events, and if you're not someone that trades them, make sure you stay out of that. Wait till things calm down, look for good opportunities. Guys, if you need to reach out to us, get in contact with us, if you have any questions, feel free to find us on social media. Take care out there, guys, and trade well. Alright guys, so just a little bonus to the video that I finished editing from yesterday. That was the market weekly rundown from Monday. Looking forward for the rest of the week, some of the expectations. Usually that's released on a Monday, but had some technical problems releasing that yesterday or last night, so I thought I'd just add in what's been happening today and just take a look at, to really keep it up to date in terms of the weekly rundown. So we can take a look at today, Tuesday the 13th of September as well, and that will help us really look at what's been going on and what we can expect to see moving forward. So let's just take another look at the daily chart. This is going to be quite a brief extra section to this video. We talked about, last night we were in between these EMAs. We were considering the possibility of pulling down. We were seeing signs of that retracement divergence. It has worked out that way. We are looking at some pretty strong retracement divergence on the daily chart here in terms of the pullback. The distance of the pullback is probably about 60% of that move to the downside, the actual size of that pullback, but maybe you got like 15-20% pullback on the MACDs. Just shows you how powerful the MACDs really are, because it's giving you a heads up to a high potential that this would not have enough strength to go to the upside. Even though if you looked at the bars and did some technical analysis just on price action alone, the strength of the move to the upside, the fact that there was some support here, a lot of traders may have been tempted to step into a long position, and what we see is a massive sell-off, and really the writing was on the wall in terms of what the MACDs was showing in terms of retracement divergence. Such a powerful way of looking at the market. So right now there's potential for this to really, it's a huge bar. I haven't really paid too much attention to the market news. I know there was a lot of news today, but as we talked about at the beginning of this video, but obviously it's a huge sell-off, practically 100 points, 200 point sell-off in the market there. So if we look at where we were last night at 41.31, we're now at 39.40. Yeah, so almost 200 point sell-off during the market main trading session. Now we're about 15 minutes away from the bell, from the first close. So yeah, that's huge sell-off. So let's have a quick look at the 10946, and you can see in more detail. I've still got some of the labels, some of the markers I left on the charts that I was really interested in the potential for price to pull a bit deeper down here, but I definitely did not expect that to happen. And just goes to show you guys that don't believe in using stops. You know, I would say it's pretty safe to say a bit of a bloodbath here for anyone that was continuing to ride this to the upside without stops in place. Looks like a lot of positions closed out here. Yeah, so we've broken this area, and yeah, I was discussing how, again, even on this 10946, the writing was kind of on the wall. I think when we were looking at the rundown yesterday, the price was around this area here, so you were just about here, something like that. And I was talking about how we were seeing a lot of divergence against this move to the upside. Just get rid of that, and ultimately what's going to happen is that price is going to correct, and it's going to come back in line with the MACDs at some point. This one would have been really hard to predict. I mean, even if you got in short here where I marked it out as a high potential for a deeper retracement, it's still moved up a huge amount here from 41.39 up until 41.75, so another 35-40 points before a giant sell-off. So this move would have been practically impossible to get into, really, for what it's worth. In terms of a higher time frame entry anyway, you might have been able to trade it on the lower time frames. Let's take a quick look at those. In terms of MACDs, yeah, just massive sell-off, broke straight through the zero line. Quite a deep pullback, got some divergence on that move. Price did not show much of a pullback really. MACDs showing a lot. Everything looks a bit skewed here with this price action. Where are we in terms of the bigger picture? Well, we are currently at quite a significant area in terms of price activity. Previously, the last couple of weeks, you can see this zone here between 39.42 and 39.62. It's a really high activity area, a lot of transactions, a lot of buying and selling going on in this area, and we're back down here again. I think there's a high probability we move down to this area. If this area doesn't hold, then there's not really much that's going to keep us in this area, or push us up. So it looks like we're going to be moving down to the next area, so we're paying attention to that. So let's take a quick look at the 1597. Now, market open was around this time here. I'm just going to mark that for some reference. So most of that, well, all of that big sell-off wasn't pre-market activity. You can see that was all pre-market sell-off. We got market open, continuation to the downside. Another big push. We had consolidation here for a little while. That's this sideways price action. We pulled back and found a little bit of resistance, or found some respect off of the fast EMA, and then made another big strong sell-off to the downside. Crazy move. Really hard to get into that without, especially if you're a pullback trader looking for an entry. There was very few opportunities. I mean, maybe that one there, and after that we just kept going. Another one there. Coming to the end of the market trading session now, so we'll see what happens in terms of like the most immediate time frame I'm looking at now, and what I think could happen. We do see some divergence here, so that's one of the key things that we're looking at here. You can see some really significant divergence on this last move to the downside. So MACDs showing a lot weaker than the actual price, indicating this, you know, potential, and that did trigger the push up here. So these main pivot points on the price, as they line up against the MACDs, you can see there's a huge divergence with an opportunity to the upside because of that. And what did you get? You got strong bars to the upside, and looks like we're going to make a deeper retracement here. So anybody who's jumped into this sell position late in the day, you know, I'd be taking profits if I was you, or hopefully not holding any significant contracts, as right now there is, you know, potential for pushing on up. Even if we look at what's happening on the MACDs here, we've got strong color change. This is something we pay attention to. RDT, this is really indicating the end of, or change in momentum, change in sentiment, that, you know, we're going to get that deeper pushback, which we're getting right now live on the market here. So once the BB step into the Bollinger Bands here, I mean, we could just keep going straight through here. I expect to see, yeah, a bit of a deep pullback, probably before continuation to the downside again, given the strength of the EMAs and how far and wide apart they are. You know, it's a brave man that's gonna take a long against this. You could scalp it, but it's a falling knife at the moment, so you'd really have to know what you're doing with taking opportunities. Probably the safer bet would be to wait, you know, till you got a real deep retracement, maybe price moves up to overextends away from the EMAs, you know, moves up like right up to somewhere like here. Maybe that's going to line up with the higher time frame EMA, and then you might get a short opportunity which you know, is in line with the trend, so on the overall trend. So it's a higher probability opportunity. It's one that I would be looking for, waiting for a real deep excursion away from these EMAs, and then look for what we call a snapback opportunity. So that's a quick update for the market weekly rundown. Today's Tuesday, 13th of September. If you'd like to learn more, feel free to come and join us at responsibledaytrading.com. You can find us across all social media. Like and comment, greatly appreciated. And I will see you on the other side. Take care, guys.